Owning a home is sold as freedom, stability, and success etched into concrete and quiet streets. Keys handed over feel ceremonial, proof you finally arrive somewhere permanent and safe. But permanence is an illusion carefully financed, regulated, taxed, and enforced by distant systems. Because what you call ownership is actually conditional permission wrapped in decades of debt. The moment you sign a mortgage, the house stops being purely yours in law and practice. A bank's claim sits above yours, senior, enforceable, and protected by courts and contracts. Miss payments long enough, and ownership evaporates without debate, mercy, or negotiation. The structure is simple, possession feels personal, but control belongs to the creditor. Even after the mortgage ends, the debt system never truly releases its grip. Property taxes arrive annually, regardless of income, employment, health, or personal circumstance. Fail to pay them, and the state can seize the property outright. Ownership that depends on constant payment is not ownership, it is conditional tenancy. Insurance adds another invisible layer of obligation disguised as protection and responsibility. Without approved coverage, lenders can force policies or declare defaults immediately. Natural disasters don't free you. They tighten requirements and raise costs relentlessly. Risk is privatized while compliance is mandatory, enforced through paperwork and penalties. Zoning laws dictate how you may use your land down to inches and intentions. You cannot build freely, modify freely, or even live freely without approvals. Home-based businesses, rentals, additions, and gardens require permission slips. The land beneath your feet answers to planning boards, not personal will. Homeowners associations extend control deeper into daily life and behavior. Fees are mandatory, rules are binding, and penalties escalate quickly. Misdues or violate codes, and liens can be placed silently. Private governance enforces conformity under threat of legal and financial punishment. Debt transformed housing from shelter into a financial instrument traded at scale. Mortgages are bundled, sliced, sold, and leveraged across global markets. Your monthly payment feeds pension funds, hedge funds, and balance sheets worldwide. The house becomes collateral in games you never agreed to play. Interest ensures you often pay multiples of the home's original purchase price. Decades of payments front-load profits, while equity accumulates slowly. Early default benefits lenders more than borrowers, mathematically and structurally. The system rewards longevity of debt, not rapid independence. Rising home prices are celebrated as wealth, yet they deepen dependency. Higher prices require larger loans, longer terms, and greater exposure to shocks. Paper equity feels empowering until rates rise or incomes fall suddenly. Then the same price appreciation becomes a trap instead of a victory. Central bank policy quietly decides the fate of homeowners everywhere. Interest rate hikes increase monthly payments, reduce refinancing options, and crush affordability. Rate cuts inflate prices, forcing new buyers into larger debts. You do not control the lever that controls your shelter. Inflation taxes homeowners invisibly while pretending to reward them. Maintenance costs rise, insurance climbs, taxes increase, wages lag behind. Your home's value may rise on paper while real purchasing power falls. The illusion of gain masks the erosion of household resilience. During crises, the truth of ownership reveals itself brutally and quickly. Foreclosures surge when jobs vanish and credit tightens overnight. Courts process homes faster than families can recover. Shelter becomes a financial variable, not a human necessity. The 2008 crisis showed how quickly ownership can vanish. Millions lost homes while institutions received bailouts and liquidity. Titles transferred cleanly while lives unraveled messily. The system protected balance sheets, not households. Yet the narrative persists: buy a home, build wealth, achieve security. Because the system depends on belief to keep debt flowing smoothly. Questioning ownership threatens the architecture supporting banks, markets, and taxes. So the story continues, even as conditions worsen quietly. Homeownership ties citizens to the system through obligation rather than freedom. Debt disciplines behavior, discourages risk, and enforces participation. Walking away feels like failure, even when survival demands it. Control works best when people police themselves. Understanding this doesn't mean rejecting homes or stability entirely. It means recognizing the trade you are making consciously. Shelter exchanged for long-term leverage over your labor and choices. Awareness is the first step toward reclaiming agency. Debt doesn't just buy houses, it reshapes behavior, ambition, and acceptable levels of personal risk. A homeowner burdened by payments avoids job changes, entrepreneurship, or confrontation with employers. Mobility declines as mortgages anchor people geographically and psychologically. Freedom shrinks quietly while stability is marketed loudly. The system rewards predictability, not independence, because predictable borrowers are easier to manage. Stable wages, stable payments, stable compliance become virtues enforced by necessity. Debt transforms citizens into reliable cash flow streams over decades. Control becomes subtle when people fear losing everything they've financed. Selling a home sounds simple until transaction costs eat years of progress instantly. Agent fees, closing costs, taxes, and repairs drain accumulated equity rapidly. Moving up often requires new debt, resetting the cycle again. Escape becomes expensive, reinforcing long-term dependence on one location. Renting out property isn't true autonomy either under modern regulatory frameworks. Licensing, inspections, rent controls, and eviction laws tighten steadily. Landlords absorb risk while policymakers chase headlines and voter approval. Ownership remains conditional, supervised, and revocable through rule changes. Generational inequality widens because early access to debt compounds advantage dramatically. Those who bought earlier gain leverage from inflation and rising prices. Late entrants face higher prices, higher rates, and thinner margins. The latter didn't disappear. It was pulled upward silently. Wages failed to track housing inflation, forcing households deeper into leverage. Dual incomes became mandatory just to qualify for basic shelter. Childcare, healthcare, and commuting costs stack relentlessly. Debt fills gaps that income no longer covers. Home equity loans convert shelter into an ATM during financial stress. Short-term relief creates long-term vulnerability to market downturns. A home becomes collateral for survival expenses, not investment. Risk concentrates where people feel safest. Property taxes rise alongside valuations, regardless of realized income. Retirees face displacement despite owning homes outright. The state claims a permanent stake through annual assessments. Ownership without affordability becomes a technicality. Insurance markets now decide which homes are livable or insurable. Climate risk pricing renders entire regions unfinanceable. Suddenly, without insurance, mortgages default automatically. Environmental reality becomes financial enforcement. Technology deepens surveillance over property and payments simultaneously. Smart meters, digital records, automated liens, and instant penalties normalize oversight. Delinquency is detected faster than hardship is understood. Efficiency replaces discretion inside bureaucratic systems. Debt creates obedience because defaults carry shame as well as consequence. Society frames foreclosure as personal failure, not structural design. Borrowers internalize blame while institutions externalize responsibility. Narratives protect systems by isolating individuals. Crises reveal priorities unmistakably when choices must be made quickly. Liquidity flows toward banks while households face eviction notices. Assets are protected before people, consistently and predictably. Ownership dissolves when capital demands certainty. Even government relief programs reinforce debt dependence unintentionally. Forbearance pauses payments but adds interest later. Relief delays collapse without changing underlying exposure. Time is bought, not freedom. The myth persists because alternatives appear risky or unattainable. Renting feels unstable. Ownership feels safer by comparison, but both operate within the same debt architecture. Choice is constrained by system design. Real ownership historically meant control without ongoing tribute. Modern housing reversed that definition quietly. Tribute now flows through interest, taxes, insurance, and compliance. Control resides elsewhere, invisibly but firmly. Some escape routes exist but require awareness and trade-offs. Lower leverage reduces vulnerability but limits access. Geographic flexibility challenges social expectations. Resilience often conflicts with prestige. Skills, liquidity, and adaptability matter more than square footage. Those who can move, earn remotely, or diversify income endure shocks better. Shelter remains essential, but debt magnitude determines fragility. Less debt equals more options. Understanding the system reframes decisions without demanding rejection of housing entirely. It replaces fantasy with strategy. You stop asking how big a home you can buy. You start asking how free you want to remain. True security isn't ownership on paper, but survivability under pressure. It's the ability to absorb shocks without losing shelter. Debt limits that ability by design. Awareness restores some balance. The debt system doesn't require malice to function effectively. It only requires participation, belief, and silence. Most comply because opting out feels impossible. That feeling is the system's greatest achievement. You may still buy a home, but you do so informed. You recognize conditions, obligations, and exit costs clearly. You treat debt as a tool, not identity, and tools require caution. This is not a call to fear homes or stability. It is a call to understand power structures embedded in contracts. Ownership today is layered, conditional, and monitored. Freedom begins where illusions end. If this story gave you a new way to see housing, debt, and control, subscribe.